Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Okay, we need to talk about this company. I'm going to put it on the screen in just a sec. We need to talk about this company and decide whether or not it is overvalued or undervalued. And I think there are some data points to suggest that this might be something that is relatively under the radar and could do quite well here pretty soon. I say here pretty soon, I mean in the next 6 months, over the next year. So the company is Colgate-Palmolive. The stock symbol is CL. And I'll walk you through how I came across it and kind of give you some data points and things that I have looked at and have considered. And I want us to kind of have a discussion in the comments. Do you think it's undervalued, overvalued? Would you consider buying it? Would you not? Why? And there are a few reasons why. Number one, we had these discussions. We all learn from each other. I understand what you're looking for. I can help create more content around that. That's number one. But also, I want to know what you think. What are the things you are looking at and understanding, and we can just have a conversation about how we feel about the stock as a whole. So consider this a case study, a classroom discussion, if you will, and I'll just bring my cases to, my points and things to the table, and then we discuss them, and then you bring me your cases and things to the table, and we discuss them, and we come up with how we feel about it. I'm not trying to sway you in any way. I currently do not own the company yet. We'll see. It depends on what y'all say. It depends on how I feel after we record this video. So let's go ahead and get started. So the whole thing started because of this guy, Daniel Leob. He runs, I think it's called Third Point. Yeah, Third Point Capital. It's a $16 billion fund. He's been building a position in Colgate. So anytime I see a bunch of money moving in a certain direction, I like to keep my eye on it. I like to monitor insider buys. I like to sometimes watch what certain senators buy and sell because it's just interesting news. And sometimes, not all the time, but sometimes they're right more often than not, especially when they're on the buying side. So clearly, this person who runs $16 billion is on to something. And I dug into it a bit deeper. So here are the things you need to know about Colgate. Number one, he bought the company because he wants to spin off the business or spin off the pet food business, which is incredibly lucrative. There is a $20 billion, he says, there's a $20 billion market opportunity for pet food. But we also know since the pandemic, people bought more pet products and had more pets than ever before. And obviously, a lot of those pets are still here, right? And once you kind of get a pet, from my understanding, I've never had one. From my understanding, you keep the pet around. You want to make sure they're taken care of. I know people that send their dogs when they have their, doggy daycare, the best of everything, including pet toothpaste and things that Colgate makes. That in and of itself makes a lot of sense. And we're still relatively early in this pet boom. Obviously, it's kind of started during the pandemic, or really, I would say grew during the pandemic. But that was just 2 years ago, was 2020. There's still a lot more time for that business for Colgate to continue to grow. So you could be getting in early while the company is still quote unquote undervalued and really under the radar for the most part. That's the positive case for it. There's also a financial case for it. And I'll put this here. You can see across that dark purple line here, that is their gross profits. Again, it's something I focus on, not the only thing, but obviously Colgate is profitable and they are very steady with the money they are bringing in, which makes a lot of sense. If you make toothpaste, and whether it's pet toothpaste, human toothpaste, they do other things, but y'all get the point here. It's something that you have to have. If we are going into a recession, it's something you have to have. You can't just avoid going without toothpaste. It's just, that's not a thing. And it definitely should not be a thing. So they're in a business that you have to have. They're producing things that are in a market that is expected to continue to grow. So a lot of the things are lining up. But there are some negatives here too. The negative, and I'm putting this in air quotes here, is because over the last 6 months, the company is down about 8.2%. That's not great. It's better than the negative 20% the entire market is. So it's a win, sort of. And if I go back and look over the last year, we're looking at negative 1.5%. Again, not great, but I'll take it compared to where the S&P 500 is right now. And it seems like this could be a discount. It could be undervalued. And getting it now, and maybe over the next year, maybe over the next 2 or 3 years, this company can really take off. Now, the other thing that you want to know, it does pay a dividend. I think I had the dividend rate written down, 2.64%. That makes sense. They're all, that's pretty solid. The other thing with Colgate is it is in a defensive positioned, because again, I mentioned the whole toothpaste thing. You have to have it, and they are inflation resistant because you can raise the price of toothpaste by $1, by $2, even by $3. If it's the toothpaste you need, you kind of have to have it, and you don't really have too much wiggle room. Obviously, you can switch to a different brand. That is a thing too, but they make a lot more brands than you think. You could be switching from one toothpaste to another, and it still goes to Colgate in either way. So that's one thing that you do want to consider there. So you're in a defensive spot. The stock is down a little bit compared to others, and you've got someone who is moving money into the company. And if nothing else, and we don't know what his exact position is, we don't know if it's 500,000 or 5 million or 5 billion. We have zero clue at this point how much money is moving into it. But usually we know when you start to see insider buying, when you start to see billion-dollar moves into a particular company, you start to see that stock climb a bit. Now, the day that this was reported, this was on, I think, Tuesday, the stock did rise about 3%. So there's a little bit of a bump right there. We also saw, I talked about Starbucks. We also talked about Nvidia. When we saw a senator buy into that, the stock started to do quite well for a little bit. Same thing with Starbucks. And this could be, I'm not saying it is, but it could be a very similar situation. Now, I'm pulling my notes here. The other thing that I want you to notice here, again, I mentioned the solid financials. I mentioned the defensive strategy here of where the company's positioned. The last thing is the PEG ratio. That is the price to earnings growth ratio. It is something that can kind of give you a gauge on whether something is overpriced or underpriced and whether it's, of value or not. Well, the PEG ratio, while not perfect, is from 1 to 0. If it's good companies that are undervalued are from 1 to 0. So if it's under 1, that usually means that it's quite good. If it's over 1, it's probably not. So in this particular instance, we have Colgate at a PEG ratio of 5.45 currently. That's not great. And if I compare it to soaps, businesses that are in the soaps market, toothpaste market, the entire PEG ratio for the entire category is about 3.24. So by that metric alone, it does seem overpriced. However, with everything else I'm looking at, you might still be able to make some money here. The thing too is all in context. Remember, everything is in context. So while this ratio may not say it's, overvalued, even if it is, you can still make money. I think that's the point here. Something can be wildly overvalued. People have been saying, Amazon and Apple have been overvalued for years. I'm like, yeah, but I'm also up 500% or whatever over the past 5 years. So I'm not saying at all that Colgate can do that, but that is one thing in its favor that is not necessarily a great indicator that it is undervalued. But everything else, I think it is. You got growth potential. You got an enthusiastic buyer here. And the other thing too is I think I mentioned it earlier, but he's looking to spin off, take the pet food business and have it launch on its own. There's no guarantee that will happen. However, we do know that pet food is rising. A lot of these companies are in that specific space, have done quite well since 2020 and continue to do so. It is a relatively stable but growing business every single year. We don't expect, the interest in pets to trail off at any point soon. I mean, you got office spaces that allow you to bring your pets all the time. You have restaurants now that allow you to bring your pets all the time. Airlines, the list goes on in terms of where you can have a pet and how accommodating our environment has become to cats, dogs, turtles, and whatever other support animals that people want. So there is a case. I'm just saying that there is a case. Now, my concern here is that I don't love that the stock is down, but again, what isn't down this year, except with the exception of the companies we talked about, like Genuine Parts and others. So let me know what you think in the comments. Do you think this company is undervalued? Do you think it is, under the radar? Is it worth looking more into? Is it worth buying? Or do you think, hey, I would probably pass on this. I'm going to go invest in X, Y, and Z. I want to know your thoughts. Do you like it? Don't like it? And let me know about the style of these videos as well, because I'm curious. I do this for y'all. Definitely do this for y'all. But those are my thoughts on the company. I will add it to my watch list just to track it. Right now, again, like we talked about Genuine Parts, we've talked about companies like Hershey and others that, at least at the time we covered Hershey's, it was up. Right. So I would rather go with one of those companies that's currently up and currently doing well, and we expect it to continue to do so, as opposed to a company that is kind of middle of the road. But again, if we are looking and focusing on quality companies, if we're looking and focusing on companies that don't have to go out and borrow a lot of money and they have those profits, Colgate does check that box. And if we are going into a recession, you are worried about whether or not the tech stock that you have is going to work and going to continue to work or struggle in 2023, then this might be a decent place to at least get a solid dividend and ride things out for a little bit. And you know that, nobody's thinking this particular company is going bankrupt. They've been around for what feels like forever. They're in a business that is well established, and they're one of the biggest players in that category. You don't have a ton of outside competitors that are really threatening them in the way that other businesses may. So just throwing it out there. Want to know your thoughts of, value, undervalue, worth buying, not buying, or just worth looking more into. If you want more detailed analysis of Colgate and other companies, then you want to make sure that you follow. You do definitely want to hit the follow button, the subscribe button, the like button, and the comment button. Do all of those things. All those things are free. However, if you want more detailed information on how to become a better investor, you want to make sure you join the members only. We do exclusive videos every single week, right? That's it for me. I'll talk to you later. Bye.